For decades, investors have used the US dollar as the default unit of account. All major valuation models and financial statements are priced in dollars. But the dollar is not perfectly stable. It expands in supply year after year, which inflates asset prices and distorts long-term returns. Since 1971, M2, a measure of the total money supply, has grown at 8% annually. When measured against this expanding denominator, traditional assets like equities and real estate have delivered far more modest real returns than most investors realize. Bitcoin offers a different benchmark. With a fixed supply of 21 million, it's engineered for absolute scarcity, something fiat currencies are designed not to have. If you believe Bitcoin is superior money, then we should reframe our thinking, not what is Bitcoin worth in dollars, but what is Apple or any asset worth in Bitcoin? Bitcoin isn't just a new asset, it's a monetary asset. It's a new lens for economic reality. In a world where money gains value over time, assets priced in that money naturally look less valuable. To test this idea, Strive and myself built a Bitcoin-denominated discounted cash flow model for Apple. We kept the core mechanics the same: project Apple's future earnings and discount them based on the opportunity cost. But in this model, the opportunity cost isn't the risk-free treasury rate, it's Bitcoin's expected return. If Bitcoin compounds at 29% annually over the next decade, Saylor's Bitcoin 24 model, then Apple's earnings, steady and growing in USD, actually shrink when measured in Bitcoin. And this is exactly what's happening historically with Apple when measured in Bitcoin as well. Its stock price and earnings are shrinking over time. The results of our DCF analysis showed that Apple would need to fall by 65% to be fairly valued in Bitcoin terms. And this isn't an indictment of Apple's business. It's a shift in the benchmark. If Bitcoin is the better money, then holding it offers a more attractive return than holding most equities today. For forward-looking investors, the implication is clear. Holding Apple means giving up Bitcoin. Reallocating capital from equities into Bitcoin isn't speculation, it's a repricing. And this makes perfect sense. For decades, we lived in a world of easy money. Every wealthy person knows not to hold a serious amount of cash. They perpetually buy stocks and real estate, ignoring the valuations of both. Now that valuations are extremely high and we have a new form of hard money, the entire financial system needs to be repriced. This means investors should likely sell Apple and buy Bitcoin today, or Apple itself should issue equity and buy Bitcoin today. If you want to read more about this, check out the report I published with Strive called Repricing the Economy in Bitcoin. I'll put a link below. Thanks for watching, everyone, and see you next time.